Hello and welcome to the MCQ lecture series. In today's class, we will be talking about multiple choice questions with respect to financial systems 1, which is the SYBA General Economics paper. So let's get started. The first question in this class, I'll be talking about MCQs from chapter 3, which is in a sense talking about financial markets in India. So let us look at the first question. The first question is financial markets deals in dash or financial markets deals in what? And the underlying options available to us are: first option is financial assets only, then we have option 2 or B, financial instruments, then it is investors, and last option is financial assets and instruments, that is both A and B. So if you look at it, financial markets deals in both these things, that is financial assets as well as financial instruments, and therefore option D is the correct answer to this question. I hope this question is pretty much clear. Let us now move to the next question, which is talking about the structure of financial markets can be studied from dash angles. What can be the possible angles through which you can study the structure of financial markets in India per se? And the underlying options are: A, functional, B, institutional, C, structural, and D, all of the above. That means the structure of financial markets can be studied through these individual angles or with the help of these three angles, and therefore here the correct option or answer to this question is all of the above, because there are three different angles through which you can study the structure of financial markets in India, and they are the functional, institutional, and sectoral classifications or ways in which you can look at financial markets in India, and therefore option D, which is all of the above, is the correct answer to this question. I hope the question is pretty much clear. Let us now move to the next question, which is now particularly focusing on one of the factors, that is, or one of the classifications through which you can study financial markets, which is the functional classification. So here the question is framed in this fashion: functional classification of market is based on dash, or the question may be framed the other way around: what do you mean by functional classification of market? On what basis do you classify markets as functional markets per se? And therefore here the underlying options available to us are: it is based on term of credit, it is based on principles, both the commercial and cooperative principles, then it is based upon the sectors of the economy, and none of the above. So whenever it is functional classification of market, it is based upon the term of the credit. Now the term of the credit can be either short term and long term, or short term, medium term, and long term, and therefore functional classification of market is based upon the term of the credit, that is, for how long you are going to lend the credit. So I hope this question is pretty much clear. Let us now move to the next classification, which is the structural or sectoral sort of classification, and here it is sectoral classification or structural classification of markets is based on dash. Now structural or sectoral classification is based on, obviously the name itself suggests it, and the underlying options are sectors of the economy, B, terms of credit. Now we know that terms of credit is in a sense the functional classification, therefore you can eliminate this option. Then you have C, principles, that is both commercial and cooperative principles, and D, none of the above. So here the structural or sectoral classification of markets is based upon the sectors of the economy. It can be agriculture, industry, and there are a number of sectors on which you can classify that, and therefore sectors of the economy, structural or sectoral classification of markets. So I hope the first two classifications are pretty much clear, that is the functional and the structural sectoral. Then we have the third, which is institutional classification, and let us see how the question is framed in that. And the question is: institutional classification of markets is based on dash, is based on dash. Now whether it is based on option A is terms of credit. Now we know that terms of credit is functional classification, or commercial or cooperative principles, we don't yet know that. Then we have sectors. Obviously we know sectoral or structural classification deals in sectors of the economy, therefore you can eliminate this, and none of the above. So here the correct answer is option B, which is commercial and cooperative principles, and therefore institutional classification of markets is based upon the commercial or cooperative principles. Yeah, so I hope this question is pretty much clear. Now we have seen the structure of financial markets can be studied from three different angles, and we have individually seen what these three angles are specifically talking about. The functional was talking about term of credit, or it was based on term of credit. Then we have the sectoral or structural, which was based upon the sectors of the economy. And then we have the institutional, which is based upon the commercial and cooperative principles, the underlying commercial and cooperative principles. So I hope all these questions are pretty much clear. That is question 2, 3, 4 and 5. Let us now move to the next question, which is talking about which of the following markets deals in credit supplied for shorter term. Which of the following markets deals in credit which is supplied for shorter term. So you can recollect that the markets can be specifically classified into short term and long term markets, or money and capital market. So here, whenever the credit is supplied for shorter term, what do you call such markets? Whether you call it money market, whether you call it capital market, whether you call it agricultural market, or none of the above. So you have to remember that whenever it is about shorter term, it is always the money market, and therefore option A here, that is money market, is the correct option or correct answer to this particular question. Market deals in credit supplied for shorter term is always the money market. I hope this is pretty much clear. When it is for the longer term, it is obviously the capital market. So I hope this question is pretty much clear. Let us now move to the next question, which is talking about the longer term. Now here I talked about short term. Now you already know the answer when it is for the longer term, and the question is framed in this fashion: which of the following market deals in credit supplied for long term or longer term? And the underlying options are A, money market, B, capital market, C, agricultural market, and D, none of the above. So now we know that money market is obviously for the shorter term. So here the possible answer is option B, which is capital market. So I hope this question is pretty much clear. Let us now move to the next question, which is talking about the short term credit market, or specifically money market. So here the question is framed in this fashion: structurally, the short term credit market is divisible under dash sectors. The short term credit market is divisible under dash sectors. This is the question, and the underlying options are organized sector only, unorganized sector only, both organized and unorganized sector, and none of the above. So here we can see that structurally the short term credit market is divided into both the organized part of the market as well as the unorganized part of the market. The later question talks about both, what constitutes the organized part and the unorganized part. So I hope this question is pretty much clear. The answer to this is both organized as well as unorganized sector. Yeah, so structurally short term credit markets are classified or divisible into organized and unorganized market. Now let us look at the next question, which is talking about the components of the organized part of the short term credit market. Yeah, and the question, short term credit market, or alternatively they can use money market as well. So the question is framed in this fashion: the main components of organized sector of money market are. Now I have told you they can interchangeably use short term credit market or money market, so therefore you have to be careful while you read. Therefore let us look at what are the available options. Which are the main components of organized sector or organized part of the money market in India, obviously? And the underlying options are A, interbank or call money market, then we have the bill market, then we have bank loan market, and all of the above. So when we see the organized segment of money market, you will witness that all these three, that is interbank or call money market, then the bill market and bank loan market, are falling under the organized part of the money market, and therefore all of the above is the correct answer to this particular question. I hope you are getting a hang of how markets are classified and what does the organized and unorganized part particularly talks about. Now here I have talked about the organized part. In the next question I am looking at the unorganized part. Now the question is framed in this fashion in case of unorganized part: the unorganized money market is largely made up of a very different sort of question, which is asking you the similar thing which was asked in the previous question. They can either ask you the main component or the unorganized money market is largely made up of what. and the underlying options are A, indigenous bankers, B, money lenders, C, traders, and D, all of the above. So here again a similar sort of question. When I'm looking at the organized part, I'm looking at interbank or call money market, bill market, bank loan market. But when I'm looking at the unorganized part of money market or short term credit market, here alternatively they can use short term credit market as well. The unorganized short term credit market is largely made up of what? So the underlying options were indigenous bankers, money lenders, traders, and all of the above. And here all these three, that is indigenous bankers, money lenders, traders, and others, are a part of money market or the unorganized part of money market per se, and therefore option D is the correct answer to this particular question. I hope it is really easy to visualize what is happening and how the flow chart is looking like. We have financial markets, and under that you have short term and the longer term market. Shorter term is called as the money market, longer term is called as the capital market, and then thereafter the short term market is further divided into two, which is called as organized part and unorganized part. The organized part consists of interbank call money market, bill market, and bank loan market, and the unorganized part consists of indigenous bankers, money lenders, traders, etc. So I hope you can visualize the flow chart with respect to financial markets in India. Specifically in this class I am looking at the money market per se, or the short term credit market. I hope question 10 is pretty much clear. Let us now move to the next question, which is the main components of organized sector of capital markets are. Now here I am done with the short term market or money market. Now here I am looking at the next question is dealing with long term market or capital market, and here the question is framed in this fashion: the main components of organized part. Now again you have to understand that the capital market is also divided into two, that is organized and unorganized. So here specifically again I am looking at capital market and the unorganized and the organized part rather, and here the question is framed in this fashion: the main components of the organized sector or segment of capital market are dash, and here the options are stock markets, then loans from banks, then we have loans from non-banking financial institutions or intermediaries, and all of the above. So here when we look at the organized part of the capital market in India, you will see stock markets, loans from NBFCs and banks to be the part of that, and therefore all of these, that is option D, is the correct answer to this particular question. I hope the question is pretty much clear. Let us now move to the last question in this segment, which is dash is defined as an organization for lending and borrowing funds for shorter term. Now here funds for shorter term, it's a definition sort of a question, and the question is dash is defined as organization for lending and borrowing of funds for shorter term. Now I've told you well in advance that whenever it is about shorter term, you call it to call that market to be money market, and when it is for the longer term, it is called as the capital market, and therefore here the underlying options are A, money market, B, capital market, C, agricultural market, and D, none of the above. And here whenever I am looking at whenever I am looking at the credit for shorter term, it is obviously the money market, and therefore option A here is the correct answer to this definition, that is money market is defined as organization for lending and borrowing of funds for shorter term, and therefore option A, money market, is the correct answer to this question. I hope you are in a sense getting an idea of how the MCQ questions can be framed with respect to chapter 3, which is from Financial Systems 1, which is the SYBA General Economics paper. So in the next classes I'll be dealing with MCQs from the same chapter, which is chapter 3, which is talking about financial markets in India, and I hope this exercise helps you. Thank you.